When it comes to hedge funds and big TradFi institutional traders and all the big player market manipulation that goes on, I'm not pretending to be any kind of expert. But today, I've compiled for you a few people who supposedly are experts, and they're going to tell you what's going on and why the Bitcoin price seems to make no sense. You know, like the President of the United States announces a strategic Bitcoin reserve and the price drops, like how that makes no sense. So we're going to find out why something weird like that might happen. So what we're looking at here is this super old video that Jim Cramer does not want you to see. Pretty sure he tried to scrub it from the internet because the Mad Money Jim Cramer on CNBC or whatever, who's just a mouthpiece for hedge funds, trying to use you as exit liquidity, telling you what to buy so that they can pump and dump you. That guy doesn't tell you how the game is played. This guy, this version of Jim Cramer, tells you exactly how the game is played from when he was a hedge fund manager. So I have a couple more examples too after this, but let's hear what the hedge fund manager Jim Cramer has to say and see if we can apply that to the situation we're in now where Bitcoin seems to be kind of weirdly dumping in price, despite lots of other bullish news and external factors.
What's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view that it's important to create a new truth, to develop a fiction. And the fiction is developed by almost anybody who's down like 2% to up 6% here. You can't take any chances. You can't have the market up any more than it is if you're up 6. Because starting Jan 2, you'll have all your money come out. So what would you do if you're in that situation and you feel like you're desperate? Is that you would do these actions?
So you're talking about the mechanics of the market.
Well, the mechanics are much more important than the fundamentals.
Oh, okay, well, but in terms of the fundamentals, you've been writing about how you
Who cares
think
about the fundamentals? Research in motion just blew out the court. But look what people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks. Now, look, over maybe 2 weeks from now, the buyers will come to their senses and realize that everything that they heard was a lie. But then again, Fannie Mae lied about their earnings for $6 billion. So,
and Bristol Myers lied.
It's just fiction and fiction and fiction. And I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down. And it's a pretty good game. You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher, and maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday. And you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal, and it is a very quick way to make money and very satisfying.
Okay.
But by the way, no one else in the world would ever admit that, but I can care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
Well, on a related note, there's so many more hedge funds today than...
So it's really vital these next 6 days because of your payday. You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So let's say I were short. What I would do is I would hit a lot of guys with RIM. Now, you can't foment. That's a violation of...
Foment?
Yeah, you can't foment. You can't create yourself an impression that a stock's down, but you do it anyway because the SEC doesn't understand it. So that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to do a lot now to save itself. So this is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment. If I were one of these guys, foment an impression that research in motion isn't any good because research in motion is the key today. So you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid. And if I wanted to go lower, I'd hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million. ante to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on research and motion. So
There's a lot of that going on today with
yeah,
RIM,
we're seeing that.
absolutely.
That's, again, when your company's in a survival mode, it's really important to defeat research and motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the bozo reporter on research and motion, and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game.
Okay.
So lesson 1, something goes on the internet, it lives on the internet forever, and you're never getting it down. Lesson 2, all you need to hear is the part where he said, the number one most important thing you need to do is make sure that nothing you do is true. So everything you say out loud, you're doing the opposite behind the scenes. Just keep that in mind. Every time you hear news coming out from any hedge fund, any bank, any news source, any government, just keep that in mind. That the number one strategy this guy just said that he has is do the opposite of everything you're saying out loud. Nothing that you say can be true. Oh, and by the way, make sure you get all your lies on CNBC. And then he went on to be the guy who was being fed the lies and then feeding the lies to the public on CNBC, just dripping with irony and hypocrisy. So that was how Cramer rolled when he ran a hedge fund. Well, how do you think JP Morgan rolls when Jamie Dimon goes on TV and talks crap about Bitcoin? What do you think is really going on there?
On September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal. He says it's a fraud.
It says he fire anyone that buys it.
Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, so unethical.
Remember what Cramer said. A, nothing you say can be true. And B, you can't foment because that's illegal, but you do it anyways. Again, are these guys telling the truth? Do they know everything that's going on? I don't know. I just think if you keep this in mind every time you hear news and every time you hear Jamie Dimon talk, you'd be wise to remember the ethos of Bitcoin, which is skepticism. Don't trust, verify. Okay, let's do another one. This isn't a video. I got this one from my guy, Forrest Hodl, who I interviewed on my channel a couple weeks ago. He did a great breakdown of this thread from Richard Byworth, who's a hedge fund guy. He said, I'm getting a lot of questions about the price action post the largest economy in the world committing to a Bitcoin strategic reserve. The price action is best surmised in a quote I will never forget from one of my hedge fund manager clients. You have to sell it to buy it. What does that mean? I'm too big for the market. If I go to everyone and say I'm trying to buy it, everyone will want to buy it. But if I say to Goldman, I'm looking to sell X billions of this or that, everyone will turn seller. So I'll be a seller with Goldman, and all these low conviction players will try to front run me by going to you, BAML or Citi, who will all approach me with offers, which I will disinterestedly buy. And gently, I will soak up all the supply from these players. Nation states are not going to pile into the market desperate to buy. They're going to be strategic. Their investment teams know how to play the game. Don't let them shake you out or stress you out. This is the aim. So yes, is there larger market factors at play? People have fears of recession. Everything Trump's doing is creating uncertainty all over the market. He's changing tariffs. He's changing taxes. Is he trying to tank the markets so that the Fed will be forced to cut interest rates so they can get the 10-year Treasury bond yield down so that when the U.S. has to refinance like $9 trillion worth of debt this year, they don't have to do it at a 4.5% interest rate? Trump might be doing all that, and it might be creating tons of uncertainty in the market, and there might be larger macro factors that are creating fear and driving down the price of Bitcoin. That might all be true. But guess what else might be true? The biggest economy in the world, the president just issued an executive order launching a strategic Bitcoin reserve and authorizing the secretaries of Commerce and Treasury to find budget-neutral ways to acquire more Bitcoin. Is it just me, or for like over a decade was the number one piece of FUD about Bitcoin, the government's going to ban it? Well, guess what? In terms of governments and regulatory risk, almost all the risk is gone. So the question is, do you really want to be the one who gets shaken out by these scare tactics? Because there might be uncertainty in the market and macro factors contributing to people going risk off. But guess what else is true? The big boys are trying to get your Bitcoin. And if and when they do get your Bitcoin from you, they're never going to give it back to you. This is the scarcest asset, the hardest money, the greatest asymmetric opportunity that man's ever known. With the arrival of the ETFs and options and banks custodying Bitcoin and nation states joining the game, these big boys are going to do whatever they have to do to shake you out of your Bitcoin, get you to panic and sell your stack. So if you want to be the sucker who'll let that happen, that's up to you. And if you want to play silly fiat games thinking, I'm going to sell now because it's going to go lower and I'm going to buy it back again when it's lower, like you do you. But just know that these big boys you're playing against have more information than you, more experience than you, more capital than you. And right now, their job is to get you to part with your Bitcoin so that they can never give it back to you. Lest you forget that there's only 21 million and there'll never be more. So what do you do with all this information? Well, like I told you, use it to be skeptical every time you hear something in the news or one of these big boys putting out headlines, mainstream media FUD. Maybe you'll come back at me and say, as soon as Jamie Dimon does turn and says he's starting to buy Bitcoin, maybe that's the moment you decide to sell. But the biggest thing you can do, I think, is ignore all the noise. Remember the fundamentals. I just made a video about this. Even if Bitcoin's price changes, if the fundamentals haven't changed, know what you own, know the value, and don't get scared. And the good news is, there's a really amazing time-tested, proven strategy to defeat the big boys at this game. It's called HODL. All you gotta do is stay humble and stack sats. So you go out into the world, you take your time and energy, you use it to mine fiat, you pay your expenses, but you spend less than you earn. Then you take any excess fiat, you exchange it for Bitcoin, you put the Bitcoin in cold storage, and then you repeat. Anybody who's done that strategy for 16 years in Bitcoin is winning. And anybody who's watching the news and freaking out about every news headline or emotionally losing their shit when the price goes up or down 5%, or spending all their time trying to trade in and out of shit coins, thinking I'm going to get a little more Bitcoin out of it, probably 99+% of those people are losing. So my recommendation, stay humble, stack sats, send this video to the next person who tells you the whales are manipulating the market. Click the like button if you like the video, leave a comment or a question, subscribe to the channel. We got to pump the numbers up. Share this video with somebody who might enjoy it. Go binge all my previous videos. Or just click play and let them play in the background and don't even watch them. I don't care. Just give me some juice for the algorithm. And as always, never forget, Bitcoin's inevitable. Let's go.